Welcome back, everyone. We got a lot of really interesting news out this weekend. It appears, preliminarily, that there are some really big issues with Sam Bankman-Fried's FTX exchange. Is it insolvent? Does it have the assets to cover what it claims to? Supposedly, they've been processing withdrawals all weekend. Is it falling apart? Is it not? Is Sam really the savior that the quote-unquote crypto community made him out to be? Well, let's find out. All right, everyone. So here we go, right? We all of a sudden get tons of noise this weekend about FTX. Don't get me wrong. There's a lot of Bitcoiners that, we saw the writing on the wall, I mean, it made sense. You see somebody just essentially creating money out of thin air, and then all of a sudden, there's problems with some of their investments, and here they are to save the day. But was it all real? Did it even matter? Was it all just a perception game? Let's dive into it. Let's kind of go back in time, though, okay? Let's go back in time. Here we go. All right, so back in September, all right, we started to see some of the essentially some of the low-hanging fruit just fall off the tree. And what I mean by that is I'm talking about insolvent exchanges, which were essentially playing fast and loose with your money, with our money, so to speak, right? Because we're all humans. I don't know who's involved, who's not. So, hey, it's all of our money. These exchanges got wrecked. These products got wrecked, and they got people wrecked. We're talking about Celsius. We're talking about Voyager. We're talking about Three Arrows Capital. Anyways, let's continue on. Alameda Research to return the $200 million worth of cryptocurrencies to Voyager Digital. All right, that was essentially right there. That was the moment where people started to think, Sam Bankman-Fried, he's benevolent. He sees a problem, he's going to help out. Always remember incentives. And this is for all of us. We are all humans. We are all incentivized. Nobody is above this. Nobody. Here we go. Alameda was the biggest stakeholder in Voyager with an 11.56% stake in the company received through two investments at a valuation of $110 million. Previously, Alameda surrendered 4.5 million shares of avoidance for avoidance of reporting requirements, which brought its equity down to 9.49%. That's right. That's exactly right. So they were invested in Voyager. So of course, Alameda Research, which is owned by Sam Bankman-Fried, Alameda Research was incentivized to go and help out Voyager. But let's dive a little more into this, because this weekend it seems like the tree got shaken loose and a bunch of leaves fell. Is crypto whale Alameda Research in financial trouble? This is 3 days ago. Okay, and we are now November 7th. Okay, so this came out on the 4th. A close look at the numbers suggests that most of the firm's assets were made up of illiquid Solana-based tokens. According to the report, the $14.6 billion the firm held on June 30th included $3.66 billion in unlocked FTT. FTT is the FTX token, okay? And essentially it gets used for paying trading fees, which is all the same garbage as everybody else's exchange tokens. Anyways, my big crypto innovation. All right, sorry. 2.16 billion in FTT collateral, in other words, vaporware collateral, 2 billion in equities, 3.37 billion of crypto held, and 134 million in cash. That equates to 11.32 billion, with 3.28 billion unaccounted for. CoinDesk claims that Alameda valued these two liabilities at 50% lower than the fair market price because the tokens are locked. Treating them at fair market value would add more than $1.1 billion to Alameda's liabilities. That's the key here, right? This isn't adding to their strength, right? This isn't adding to their assets. This adds to their liabilities if they were to actually value it correctly. But this is the thing about accounting. You could do all kinds of accounting shenanigans, and it's all considered legitimate. I will continue. Alameda currently Alameda currently has over 6.11 billion in FTT on its books. FTT is its own token. That's right. It created money out of thin air, and then it put it on its books, and then it was given a value. And then all of a sudden, everyone pretends like this is real. I mean, this is okay. I will continue. So they have 6.11 billion in FTT on their books, 5.82 billion of which it counts as assets. FTT is a coin launched by FTX that traders can stake to unlock discounts from 3 to 60% on trading fees. So this is actually a bigger scam than I even thought, because in other exchanges, essentially, if you just hold their token, then we'll give it an example like Binance. The BNB token gets used to pay for the trading fees, but in this case, Sam was smart, right? He understood the scam of staking, right? You get people to leave the liquidity there, and you constantly get to count it as assets. So you quote unquote stake the Vapor shitcoin, and you get discounts on your trading fees from the shitcoin platform. Brilliant, Sam. Brilliant. According to FTX's official website, there are currently 197,091,309 FTT in circulation, putting the coin's market capitalization at 4.87 million. That means the current FTT market is completely illiquid. Let me repeat that. The current FTT market is completely illiquid as far as Alameda is concerned. It's holding 5.82 billion worth of a token that it can't sell without cratering its value. Guys, it cannot sell its token without destroying itself. Okay? This is the typical scam. And so you see FTX battling back and forth with Binance. Now, essentially what happened was CZ got wind of this, and CZ, who is the CEO of Binance, has been selling. They've been selling their FTT tokens and their FTT token. And as a result, Sam Bankman-Fried is playing this back at CZ and selling BNB. Don't get me wrong. They're both shitcoins. This is all garbage. Okay. There's no question here. This is all garbage. But if I was to pick a winner, I think CZ, unfortunately, CZ is going to stick around while FTX is going to get completely scalped by vultures. Either that or it just completely goes away. So when we think back to September and we think back to benevolent Sam Bankman-Fried, oh, look, he's stepping in. He's helping these distressed exchanges. They made mistakes. He understands. He wants the ecosystem to grow. Make no mistake. He was saving his own skin. Now, we are going to that's my opinion. Now, we are going to fast forward to this morning where, don't get me wrong, but these are just, this is red flags for me. And it's not just me. Fellow Bitcoiners see this as clear as day. So let's dive into this tweet storm from Sam. Here we go. Okay, not a tweet storm, just a couple of tweets, but still, it's very interesting. November 7th, 7:38 a.m. Must have been sweating to get these tweets out this morning. Anyways, a competitor is trying to go after us with false rumors. FTX is fine. Assets are fine. Details. But my favorite part about all this, people, my favorite part of all this, you'll notice that he's restricted the replies. Now, look, don't get me wrong. I know nobody likes to see crap in their feed, but I'll tell you this. If you are actually being objective and you say you're doing what you say you're doing, you could give a shit what anyone else has to say. But yet, he is censoring those who can respond. Okay, so that was his first tweet. Guys, have no worries. FTX is fine. Second tweet. FTX has enough to cover all client holdings. We don't invest client assets, even in treasuries. We have been processing all withdrawals and will continue to be. Some details on the withdrawal speed. So we're processing all your withdrawals, okay? But you might have some problems pulling the money out. So we're just giving you a heads up. We're setting the expectation. Fantastic customer service, if you ask me. It's heavily regulated. Even when that slows us down, we have GAAP audits with less than $1 billion in excess cash. We have a long history of safeguarding client assets that remains true today. Here we go. Final tweet on this. I'd love it at CZ Binance if we could work together for the ecosystem. That's right, guys. That's right. This is all just for the ecosystem. Okay. Now, I unfortunately am going to have to bring up Celsius. Okay, because Celsius also, Alex Mashinsky had everybody rest assured that their funds were SAFU, right? They're safe. It's all good. We don't have to worry. It's all good. We know exactly what we're doing. We're competent. I'm the father of VoIP. How could you not trust me? And yeah, they're gone. Okay. Then we had Luna. Actually, first we had Luna. And Luna did the same thing. Funds are safe. You don't need to worry. And it's gone. And Do Kwon is on the run and pretending that he's not. Okay. So now we have Sam Bankman-Fried, okay, who essentially is censoring responses to his tweets and letting everybody know that your funds are safe. So this teaches everybody a very valuable lesson once again. Okay, and this is the same lesson that was taught to me back in 2017, 2018, and the same lesson that we all continue to harp on. If your Bitcoin is on exchanges, it is not your Bitcoin, number one. Number two, okay, these exchanges, you need to understand that in a bull market, when everything is going up, all of these bullshit financial products that they are creating work. They work because everyone is making money. The second Bitcoin starts to drop and the liquidity starts to dry up in this market, they no longer have legs to stand on because they built a business on sand. Okay? Now, I'm not saying that Alameda Research is going to go bankrupt. I'm not saying that SBF, that FTX is necessarily going to go bankrupt. But what I am saying is there's a lot of red flags and we all need to pay attention to them.